Good afternoon, traders and investors. Will back here with another one, coming to it a Thursday market recap. Hope all of you had a very beautiful day of trading today. And in today's markets, guys, well, we had a tiny little bit of a pullback after yesterday's massive rally towards the all-time highs. And most of the pullback was attributed to the CPI inflation report that came in this morning and came in slightly, ever so slightly worse than the expectation. So in today's video, guys, I have a few things prepared for you. Number one, we're going to go over that CPI report and see whether or not inflation is still somewhat of a sticky problem, or whether or not this may just be a one-off report in terms of a slight uptick in inflation. Number two, we're going to go through one company earnings that I have prepared for you guys, and that is going to be Domino's Pizza, who came in with their earnings before the bell. They're going to give us a little bit more insight into the health of the consumer in the current macroeconomic environment. And then number three, of course, we're going to go through our major technical analysis rundown of our major market indexes, see how they stand up after today's pullback. Thereafter, take a look at our major big tech names, see how they're also shaping up after today's price action. And lastly, take a quick glimpse into my portfolio for a lot of the closing trades, a lot of the wins that we had over the course of the week, and how I remained positioned into tomorrow's price action. So without further ado, guys, a lot to cover in today's video. Let's jump right into the action. So the SPY down a very small 0.18%, the QQQ down a very tiny as well 0.11%, but for the most part, you did have broad market consolidation after yesterday's massive rally, but I wouldn't say that there's any big red flags in the market as of yet. Take a look at the heat map right here. You will see that it was a very, very mixed market for the most part. A lot of big tech names, extremely mixed. Amazon and NVIDIA, your biggest winners of the day there. Consumer defensives also having a bit of a pullback day. Costco down almost 2%. Financials, consolidation in financials, guys, but we know the big catalyst for financials is going to be tomorrow. Tomorrow, JP Morgan Chase, Wells Fargo, and BlackRock coming out with a lot of their corporate earnings, of course. And then next Tuesday, we get the rest. Bank of America, Citigroup, Goldman Sachs, and other things like that. So tomorrow, definitely a huge day for financials, and we'll do a very brief recap on the channel, of course. And then, of course, guys, in the rest of the market, healthcare continuing on its little decline here, and the bottom half of the market as well pulling back. Energy having another positive day. So as you can see, guys, very, very, very mixed market in today's price action. But as a whole, I still do remain confident in saying that there's no major red flags even after today's pullback. Taking a look at the one-day performance, you can see that only energy and basic materials etching out some gains here. Technology largely flat, and everything else moving to the downside, led, of course, by real estate, industrial, consumer defensives, and utilities. Those are responding once again in a negative fashion because we keep having this persistent increase in the longer term yields, especially the 10-year and the 20-year. But we've said on the channel, guys, for the past couple of weeks, we are now approaching overbought conditions on our yields, especially on our long-term yields, approaching on the 20-year, big area of prior resistance, which are our previous support, which should now be resistance as well. So I would not be surprised if those longer-term yields are somewhat topping out in the current macro environment right now. And that is most likely going to signify a possible short-term bottom in those sectors that are most heavily hit by those increases in interest rates. Consumer defensives, they've been pulling back for the last 2 weeks since we've had those since we've had those 20-year yields on the rise. Utilities as well, same concept, been pulling back since the yields have been on the rise. And real estate too, been on the decline since we've had interest rates going up, right? So that is pretty much our glimpse into the market. Before we get into more technicals, let's go over some CPI data, and we will see, guys, that it really wasn't that bad. So take a look at your month-over-month consumer price index here for inflation, 0.2 rather than 0.1 expected. Now, that is slightly higher than the estimate, but came in exactly in line with last month's data. This gives an annualized rate of 2.4%, slightly higher than the estimate was 2.3, but still lower than last month at 2.5. So this is the lowest read that we've had in the last 2 years, even though it came in slightly above the estimate. So that's why we say it's not so bad. We came in above the estimates, but we're still below last month. Where a bit of the problem was here is in your core. So consumer price excluding food and energy, also known as core, that came in at 3.3, a slight uptick over the expectation and a slight uptick over the last month's worth of data. So as you can see, guys, quite a mixed CPI result as a whole, but I wouldn't say we're coming back into runaway inflation. Let's take a look at the article right here. So inflation rate at 2.4% in September, topping the expectations. Let's take a little glimpse below. As you can see, the graph is still looking great, guys. Inflation as a whole is still moving in the right direction. The light blue dotted line is your core. There you can see the slight, ever so slight uptick to 3.3. But for the most part, guys, inflation is moving towards the Fed 2% target over time, right? There will be these little blips here and there, but all in all, guys, we can see a very clear downtrend, and today's data reiterated that point as well. Much of the inflation increase, more than 3/4 of the move higher, came from a 0.4% jump in food prices and a 0.2% gain in shelter costs. That offset a 1.9% fall in energy prices. Other items contributing to the gain, including a 0.3% in used vehicle costs and a 0.2% rise in new vehicles. Medicare services were up 0.7%, and apparel prices surged 1.1%. Apparel has to be the biggest anomaly of the report today. Here we can see the month-over-month change. 0.2 is still very healthy, guys. That's an annualized rate of 2.4%, which is still in line with historical averages for the most part, right? Really trending towards the 2% goal. Though the inflation reading was higher than expected, traders in futures markets increased their bets that the Fed would lower rates by another 0.25 percentage point in the November policy meeting to about 86%. So 86% odds that we're going to have another rate cut in November, and most likely another 0.25% decrease in the month of December too. In recent days, policymakers have said they see rising risks in the labor market. And that is pretty much the takeaway, guys, from this inflation report as a whole in terms of how it relates to the Federal Reserve. Federal Reserve is, for the most part, no longer concerned with the threat of inflation. They largely deem it to be conquered, especially on the forward expectancy, right? We know that prices have come up a lot in the last 2 years, and everybody has been feeling it. But the moral of the story here is, are prices getting exponentially worse? Is inflation out of control? And the short answer is no. The Fed is now more concerned with risks in the labor market, rising unemployment, right? Stuff like that. So that's why they have started cutting rates, as a matter of fact, and why they will continue on the path of rate cuts as per now. The only thing that would make them pause those rate cuts is a significant uptick in inflation, something we are just not seeing right now. Let's take a look at more of the table here so you can see where the inflation came from. Food, an uncharacteristic gain here, 0.4%. Here is all the last 6 months worth of data. You can see really somewhat of an anomaly, right? I wouldn't say that this is signaling a major uptick back in the prices of food. We'll have to monitor this data 1 point at a time. But for now, definitely an anomaly in this report. Energy down in a very healthy fashion, 1.9%. That's where a lot of your declines came from. In terms of apparel, you can see as well, big anomaly in apparel, right? For the most part, we have been trending slightly towards deflationary trends, but a 1.1% uptick here, we haven't seen that really since the month of April. So that slightly little anomaly as well. I wouldn't say that 1 month of data is enough to derive a trend. And shelter now coming down to a lot more manageable levels. We were trending, guys, at 0.4, 0.5% month over month increases, and that is not good, right? That's about 5% annualized. So now shelter has put in one of the lowest reads we've had in the last 6 months, which is quite good if you ask me. Once again, we'll keep a close eye on this trend. And here is your overall CPI. So here's your overall graph for the CPI read. If we want to put in context a lot of these numbers that we've just seen on the graphs, right? Let's take a look at some of them that were problematic, right? So apparel, slight uptick in apparel. Where has apparel been? Well, that's that yellow line right here. As you can see, we were very close to zero and now slightly upticking back to about 1.8%. But anything under 2 is still quite manageable. Take a look at shelter. Shelter continues its decline, and this has been one of the most sticky elements of inflation so far. So nice to see that that one has been on the downtrend as of late. And then, of course, guys, we have the food. So food stuck at about 2.1%. Even with that month-over-month increase, you can see that we're largely in line with some of our historical average numbers, right? We've seen upticks over 2% in 2014, 2011, and things like that. So I would not say that the current level of forward inflation is that much of a problem for food as of lately, right? So all of that being said, guys, here's your last one, commodities, which is goods. And here you can see, guys, this is the slight uptick in your commodities, right? But it's still in a negative deflationary environment. So I wouldn't be too worried about this. We are trending back up to positive territory, but still, for the most part, guys, still in a deflationary environment, which is why I say the inflation report today, even though it missed the estimates, it really wasn't that bad. And lastly, we're going to wrap it up with something that I always cover for you guys on inflation, where inflation is and isn't. So Yahoo put together for us a basket of roughly 25 different items, and we're going to see how it compares to the overall rate. So here's your overall inflation rate at about 2.4%, and let's go top down. So auto insurance, the big anomaly for the year so far, but most of that pricing has already been delivered. We're not expecting this to increase. These were the early year bumps. Thereafter, rent and housing are some of the few that remain well above the overall rate of inflation and still remain above average hourly earnings. So this earnings line right here, these are wages, guys. And as you can see, earnings for the most part, wages are now rising higher than most of all the items in this basket of goods. What does that mean? It means that the consumer is slowly but surely regaining pricing power over time, and that is a trend that we want to see continue. Now, what's below average hourly earnings but still above inflation is restaurant meals, still a little bit high, education still a little bit high but manageable, medical care, personal care also in the mid 3% range. 2.5% here is household energy. That one's come down a lot. Now, below the overall rate of inflation, we do have some very important items here, guys. Prescription drugs, college tuition, clothing, airfare, groceries, a big one, 1.3%. That is a very solid number. And recreation as well. People like to have fun, of course, 0.7%. Pet and pet products, deflationary. All of these later items are deflationary, right? Transportation, a big one. A lot of people take public transportation, right? That one is down 1.1%. New vehicles, furniture, electronics, appliances, a lot of these are important, right? Hotel rooms, toys for kids and stuff like that, used vehicles, rental cars, and gasoline, the big one to the downside. So as you can see, guys, the overall basket of goods is trending below the overall rate of inflation, but there are a few sticky elements as we've described, and most of those has to do with our housing costs. But nice to see that groceries and other things that we use every single day are now at much more manageable levels. So that's pretty much everything we had for the inflation report today. Hopefully that was insightful as to where we are currently standing in the grand scheme of the whole inflation narrative. It is getting better, guys, not getting worse. Now, moving on, guys, what we're going to cover next is our earnings from Domino's Pizza. So let's pull those up real quick. And as we can see right here, Domino's came out with their earnings, and they're still kind of stuck in this lower range of accumulation at the lower 400s. Take a look at their numbers right here. They came out with a mixed quarterly earnings. So EPS, their bottom line profit margins, very nice beat here by about 15%. That's a very big beat, guys. But they ever so slightly missed on the revenue number, guys. So mixed report from Domino's as a whole, which resulted in a 1% decline. Stark contrast from last quarter where they dropped an uncharacteristic 14%. Now, really everything has kind of been baked in, right? We know that Domino's Pizza is a highly consumer-facing company and can be a gauge of whether or not the consumer is still currently healthy or not. So let's have a look at what Domino's Pizza said on their quarterly earnings report. Let's have a look. So let me move my big head to the side and we'll get into it. So global retail sales growth, 5.1%. That is very healthy, guys. That's in line with some of your best performers as of lately, such as McDonald's, Chipotle, and all the companies that are still doing very, very well through this macroeconomic environment right now. US same-store sales growth of about 3%. That is slightly lower than I'd like to see. Usually you'd like to see these between 4 and 5% if possible, such as your highest growing companies are doing like Chipotle. But 3%, I wouldn't say it's that bad, right? Starbucks is a disaster if you want to do it in comparison. International same-store sales growth of only 0.8%. So this is an area where the company is slightly faltering, and they addressed that in last quarterly earnings, if you remember. A lot of that has to do with one of their major franchisees closing a lot of locations in both Japan and the France markets. Some of the stores that have been performing or underperforming rather, and they haven't really been expanding internationally too much either. So this still a little bit of a pain point for the company. Here's what the CEO had to say. Our third quarter results were once again demonstrated that our hungry for more strategy is resonating. This is their promotional strategy right now to kind of stimulate demand for the consumer, right? Despite a pressured global marketplace. In our international business, we are on track for our 31st consecutive year of same-store sales growth, demonstrating our sustained long-term track record of success. In the US, we drove our fourth quarter of profitable order count growth, highlighting that our strategies are driving positive outcomes. And this is true, guys. They are navigating this current landscape better than a lot of other food companies. Renowned value is a competitive advantage for Domino's and one where we are industry leaders. With the slate of initiatives we have in place, I am confident that we will continue to win and grow our market share across the globe for years to come. So management remains bullish, and they don't really talk about any of the macroeconomic headwinds much at all, right? Very, very confident in their language right there, which is what you want to see from the leaders of such a large and international company with so many locations. Now let's move into the numbers, guys. And as we'll see, they're actually quite good. So look at your global retail sales growth here. US 5.1% for the last quarter. In the last 3 quarters, that is 6.6%. Definitely not synonymous with a company that's getting crushed under the pressure of a weakened consumer, right? They know how to appeal to their demographic. I'll give them that. International stores, retail sales growth, 5.1% in the last 3 quarters, 6.5, very, very good. So same store sales growth. So here's why these two things are different. Domino's also collects a lot of money from franchising fees, royalties, an advertising business, which is why the retail sales growth number is going to be different than the actual same store sales. This is actually your food sales, right? This encompasses all their other lines of businesses that provide revenue from different sources. So here's the most important metrics, right? US company-owned stores, there's your 3.1%. US franchise stores, 3% in the last 3 quarters. US company-owned stores, 5.4%, and the franchisees, 4.4%. Still very, very, very healthy. And in terms of your third quarter for international, 0.8%. That's a little bit lower than expected. You can see that the historical last year was a lot better at 3.3%. And in the 3 fiscal quarters ending 1.1%, you can see that last year was 2.6%. So international, still a little bit of a pain point for the company. But here's how all of that impacted bottom line margins, guys. The bottom line margins actually went up. Take a look here. US company-owned store gross margin. Gross margin was very good at about 16.8%, right? And for the last 3 quarters, 17.3%. In contrast, this last quarter compared to 2023, it was 15.8%. So we have literally a 1 percentage point gain in gross margins. Very healthy. And over the last 3 quarters, a 0.2% bump. Now, where do they stand on net income, guys? Well, net income, 13.6% to the bottom line. Very, very, very healthy, guys. In the last 3 quarters, 12.7%. Looking quite good. You might ask, well, what is Domino's Pizza's historical averages? I'm glad you asked. Here they are. Profit margins for the last 14 years. As we can see, they're at their most recent highs for gross margins, at their most recent highs for operating margins. These in the last 14 years, guys. Look at this beautiful net margin expansion too. So the company is really, and 12.7 would be well above where we are right now. We just came in at a read of above 13. So this would be probably the company's best net profit margins ever recorded. And this is in a landscape right now where the consumer is feeling a little bit weaker. So Domino's Pizza, even though they may not have a lot of pricing power, they're playing the cards that they've been dealt in the best way possible, right? So very decent report from Domino's Pizza. We'll continue on to a few more things. Share repurchases. The company had a total remaining authorized amount of about $926 million, which is quite good, guys. Domino's is not, even though they have a ton of stores and you may expect them to be a higher valuation, right? They're only at about 14.3 market cap, which is not that much, right? If we do 923 million divided by 1430, you'll see that that's oops, I did that wrong. 923 divided by 14,300. You'll see that's about 6% of the entire market cap that they still have in buybacks remaining. So a very, very, very healthy number for Domino's Pizza, right? And here's what they do with those share buybacks. They've been buying shares back for a very long time. As you can see here, a buyback machine. So this company is delivering returns to the shareholders in the form of a nice dividend, 1.5%, and consistent and consecutive share buybacks with about 6.5 remaining of the float outstanding. So all in all, guys, not a bad report from Domino's Pizza. A lot of people were expecting worse from the company, and the company is actually, as I said, they're playing the cards that they have in their hands the best that they currently can in the current macroeconomic environment. And we saw that from Pepsi as well, right? And we expect that from these veteran companies. This is not their first time around into a recession, right? Or into a consumer slowdown. They know how to navigate these markets. So I do expect them to be able to manage these quite well. Now, in terms of the valuation, guys, well, they're growing revenue at about 6.6% per year, and they're expanding EPS here by about 11%. I forgot to show you guys one thing. That is their next year's guidance. in line with historical averages, right? The remainder of 2024, 6% in retail sales growth and 8% in income from operations growth. 2025, they're saying the exact same thing as 2024. So no slowdown for Domino's Pizza in terms of guidance for 2025. And the long-term guidance is slightly better than we currently got, 7% global retail sales growth and their 8% classic annual income from operations growth. So all in all, guys, the company's guidance is fairly decent to say the least. Now, where we have the valuation, guys, is their 2024 forward PE at 410 right now is about a 25.2. 25.2 for Domino's, guys, in the grand scheme of things, is not all that bad. As a matter of fact, it's quite cheap. Take a look at the historical average of PE for Domino's. You'll see that at a forward rate of 25.2, that is somewhat low in terms of the company's history, right? Here's where we stand right now. The forward is slightly lower, and you can see that's towards the lower end of the range of the last 10 years worth of trading. So I would say that Domino's, although they're not at a tremendous deal, they are in dip buying territory. Now, the PEG ratio, which is not the best metric for Domino's because they're a more value-oriented company, the PEG is sitting at about 2.29. But as I've said many times, when the EPS is close to 10% and not a lot higher, the PEG ratio is not the best metric for some of these more value and defensive companies, right? For that, we look at something like the free cash flow yield, and sitting at 3.3%, it's not the best, but it is quite decent, right? It's just good. It's not bad. It's not great. It's just right there in the middle. We usually look for free cash flow yields between 2.5% to 5%. The higher, the better. And at 3.3%, that's literally right in the mid-ground of what we look for. And as we said, the PE is in line with historical averages. In terms of the growth of the company, guys, the growth of the company is doing fantastic. Nothing bad to say. Look at this EPS expansion and beautiful revenue expansion as well. So no major red flags on the horizon. A lot of analysts do have price targets. You can see here. The average price targets, guys, are closer to 487 all the way up into the 500s, and most analysts have this as either a hold or a buy or a strong buy. So the sentiment on the street is still quite good for this company. In terms of the technicals, guys, well, we know the drill, right? Domino's coming down to a very large area of support right now, trying to set up for the monthly higher lows for further trend continuation. So if I had to make a bid for this company, we are pretty much in the zone right now where we want to be bidding for this company. So if this is a company that interests you, perhaps, this is literally the area that I would be interested for a slight swing trade all the way back up potentially to the high 400s, even 500s. That would not be a stretch for the valuation at all, guys. So there could be a very, very interesting swing trade on our hands for Domino's Pizza. And that's everything that I had for you guys in terms of that earnings presentation. Hopefully it was helpful. So now, guys, let's move into some more interesting things. And that's going to be our technical analysis portion of the video. And as you guys will see, even after today's slight decline, not much has changed at all, right? So even though the daily on the SPY looks a little bit weird, we can look at the futures and it'll paint a much better picture, right? Beautiful daily uptrend, daily higher lows are set, and just looking for that continuation of the uptrend, right? Clear as day on the futures chart. So here's the actual SPY chart. And as you can see, gorgeous daily uptrend. In the event we top out here and move a little bit lower, well, we have a lot of space, guys. Anything above 565, looking for the daily higher low for possible further trend continuation, not looking too bad at all. And in the event that we completely roll over, let's say financials earnings are a disaster tomorrow and the market completely falls apart for XYZ reason, and we get the daily downtrend flush, just understand who's in control here of the longer time frames. Weekly bulls in full control of this weekly uptrend. We'd just be looking for a weekly higher low, anything above 538 at this point, weekly higher low for further trend continuation. So as of right now, guys, no major red flags in the technicals for SPY. Moving on to QQQ, same concept as well. No major red flags, even though the QQQ looks slightly messy. You can pull up the futures and you'll see it paints a much better picture. Beautiful daily uptrend right now. Daily higher lows are set with these guys down here, and just looking for the continuation of the daily uptrend. Now, so far, no break of the highs of the last 2 weeks, but still the bulls do have a decent amount of momentum behind them right now. So if we do break those highs tomorrow, daily uptrend simply continues. In the event we pull back, we're just looking for a higher low. Anything above these guys, 477, looking for that daily higher low for a possible second attempt at the daily trend continuation. And we do have very good support below us here, guys, on the QQQ at about 482 down to about 478. This has been a big area of congestion in the past. and I do expect the bulls to hold some good lines of defense right there. All in all, though, guys, looking fairly good on the weekly too. Everything looking like a beautiful weekly uptrend right now. So even if we get some extended pullback through October, we know that we're just looking for a higher low, anything above 448, looking for that higher low for possible further trend continuation. Now, moving on to XLF financials. Financials, guys, going to be very impossible to, give my best sense of direction for price action just because we have so many big earnings tomorrow, right? We can really move this one either way. Suffice to say, if the earnings are bullish, well, we are going to go away from this long-term range, smash the all-time highs, and it will just be a continuation of this slight daily uptrend that we have right now, and just a continuation, guys, of what I've been pointing out for a few weeks now, which is your bullish accumulation zone. This is otherwise known as a bullish triangle pattern formation, right? Usually these do break in a bullish fashion, especially when we have a already bullish lean because of our higher time frames, right? We know the monthly is in a gorgeous monthly uptrend. The weekly has been an uptrend. So we do have a slight bullish bias here. And I would expect that the bank's guidance for net interest income, the most highly looked at metric for the banks, their guidance is going to be higher, guys, because interest rates are now coming down. So watch for the break to the upside, guys, but if ever earnings are not well received, take a look down here, 44.63. If you lose 44.63, suffice to say, daily uptrend is lost, and we're going for a little bit more weekly consolidation. At that point, anything above 43.50, this guy right here, just gonna be looking for another weekly higher low, tighten up this range right here, and maybe have the breakout later in November. Now, moving on to healthcare. Healthcare retracing a little bit, 0.37% to the downside. So we know that healthcare has been kind of stuck, right, in this daily downtrend for a significant amount of time. Let's call it about a month and a half at this point almost, right? So now have this nice little bounce underway. Take a look at the size of the bounce right here. The size of the bounce is actually not too bad. We got all the way up to about 78%. So that being said, guys, we have now lost the hourly time frame back to the bears. So we know that this might have just been the top of the move. And now we're looking for the daily higher low for a possible daily uptrend shift back to the bulls. We also know that below us is a very nice area of support, 151 down to about 150. Prior resistance from the prior all-time highs should be acting as support. So if the bulls do consolidate, they need to play defense and give us that daily uptrend. And only then will we know that the weekly lows are set. And then we look for the same thing, guys, looking for the size of the bounce on the weekly and possibly setting up for the two-step weekly uptrend recovery process. Healthcare has been relatively weak recently, guys, but just remember who's in long-term control here. The bulls, right? After being stuck in a accumulation range for almost 3 years, guys, we've now just embarked on this new leg of monthly rally higher. I would not be surprised if we're just expecting a monthly higher low for further continuation to the upside come November and December when seasonality is more on our side. Moving into semiconductors, semiconductors not looking too bad at all, 0.2% to the downside, but not that bad of an end to the day, right? We know the context here is a daily uptrend, and we're just looking to break out of the previous highs, similar to QQQ, and get out of this big red box of resistance that we're currently in, right? So if we get that break higher over the session tomorrow, it could open up one of my favorite trades, guys. This would be a breakout, possible retest thereafter of our resistance range, which would then be support, could offer an opportunity, guys, for some swing trade continuations for the long trade setup. Not looking too bad. And in the event we pull back a little bit, guys, just understand we have a lot of space, anything above 237.21, just looking for a new daily higher low and maybe a second attack at this resistance zone. Where it all falls apart is if we lose the daily uptrend by pulling back too much and come back into this zone of support. Just understand, though, the bulls have created a lot of space on the weekly, looking for a weekly higher low for possible further trend continuation. Anything above 214, as a matter of fact, would be looking for the higher low. And we know we have big support below us here, guys. 237 down to 225. So no major red flags on the longer term timeframes for SMH just yet. Now, before last, moving into the IWM Russell. Russell not looking too bad at about 0.55% to the downside, but still a down day for the Russell. We know that growth stocks have been a little bit out of favor as of recently, and the bears just continuing with the daily downtrend. So we know that weekly consolidation is still underway right now. We are trapped in this very, very wide range of accumulation right now. And I would not be surprised, guys, if we continue having this mixed economic data and things like that, right? It's going to be very tough for the Russell to run in this current environment. The Russell really needs a green light environment for the risk on trade. And so far, I don't think we have that. For that to happen, we would need to break through all of this 2020 and 2021 resistance above at 225, 230. And in my opinion, that's only going to happen, guys, when the macroeconomic environment clears up a lot, right? We get rid of a lot of geopolitical tensions in the Middle East. We get a lot of the recession narrative out of the way with better and better data moving into the next few months. That will allow for the monster rally in the Russell and the risk on trade that everybody's been anticipating, but has kind of been a little bit muted since it started back all the way here in the month of July. So I would not be surprised if we continue in this tightening range formation. I would be interested in the Russell 210 down to about 208. Now, lastly, the Dow Jones. Not looking too bad at all here, guys. Dow Jones almost a new all-time high today, but not quite. So we know the context right now on the Dow Jones is in a daily uptrend, clear as day. And now, after a bit of consolidation, trying for the all-time high breakout. So daily uptrend is in force right now. Keep an eye on these lows, guys, because any momentum to the downside just can be looking for a daily higher low for a possible all-time high break and daily uptrend continuation. But to the downside, if we break 41,865, look out below, guys. It could open up the doors for your daily downtrend formation. And then we know who's in control of the weekly. At that point, weekly uptrend, we would just be looking for a weekly higher low for further trend continuation. So the bulls with tons of space, guys, anything above 40,000, the lows right here, setting up for a higher low. And look at this area of confluence, 12 EMA right down here at about 41.2, 41,000, right? And into the previous horizontal level of support that we have back there that I outlaid these guys on the chart, right? So I can extend this a little bit more so it makes sense on the weekly. This is going to be your area of confluence. If ever the bulls need to pull back for a few weeks, they have a lot of defensive zones down there. So that's pretty much everything we had for your Dow Jones. Now let's take a look, guys, at Bitcoin, because I promised I'd do Bitcoin today. So before we get into big tech, let's cover Bitcoin a little bit. So Bitcoin, unfortunately, could not get it done, right? They could not get the daily uptrend back after this big flush. So the bears capitalized lower high into lower low. Daily downtrend is underway, which means that our weekly consolidation simply continues at this point. And we are looking, guys, keep a look at this, right? We want the bulls to set up a higher low for a weekly uptrend expansion. We have not had a weekly uptrend on Bitcoin, guys, since this rally back here. So it's been about 6 months at this point in time, right? We know that the weekly is looking good for a momentum cross, but Bitcoin as well, kind of getting tied up in that risk on trade narrative, right? Very tough for Bitcoin to run when the entire risk on trade is not running right now. If anything, we would like to see Bitcoin kind of maintain its levels of support that it's established over the past 6 months of trading. And so far, no signs that we're going to lose the big ones down here at 57.55. So although the bears did have a very nice momentum move to the downside, setting up the daily downtrend, the way we close the candle is pointing slightly bullish, right? We recapture the 200-day EMA, which is this green line right here that you can barely see. My apologies, but we're still above the 200-daily moving average. And we also didn't put a close below the highly contested zone that I've been looking at, which is your 60,000, right? 60,000 is a big one. It's acted as a big area of congestion here for pretty much the past 6 months. If you lose 60 though, guys, watch out below because we're coming back down into the 57 range, which is your longer term weekly support. And at that point in time, guys, the bulls will have lost all momentum and we are going to have to start the same whole process again. So hopefully for the bulls, they can keep it up because the weekly trend change is still a possibility and is still alive. But the more the bears claw back into this lower zone, guys, the more momentum they lose. And then unfortunately, we have to restart this whole process from scratch. We were counting on this engulfing move possibly being the one, but we'll keep our eyes peeled. In terms of myself, the way I'm playing this, I still love accumulating Bitcoin down here for a longer duration swing trade through 2025, 26, 27, 28 for the long-term portfolio. I love accumulating Bitcoin here, guys. 57 down to about 53. I will be a buyer once more. Now, moving into our big tech names, shall we? Moving into Apple. Apple, not too bad of a showing today. 0.22% to the downside, but we are still stuck, guys. We're still stuck between the 227 and 223, right? So daily chart, guys, no real defined price action as a whole. The best we can do is go with our most recent lows and our most recent highs, right? So if you get the breakout of the most recent highs, well, you guys will know they have a good chance at recapturing the daily uptrend. So far, right, small little daily downtrend, engulfing move, trying to get it back. But for all intents and purposes, we've really been trapped between this roughly $5 to $7 price range. Very tight price action. And if we lose 221 to the downside, well, we roll over the daily uptrend formation into daily downtrend, and just into further weekly consolidation. The daily is messy, but the weekly should provide you with the best picture, right? We're really trapped between 233 and trapped between this lower end of support down here. That being said, the bulls are not looking too bad, right? Tight range of accumulation. We're still above the 12 EMA, this yellow line right here. So if the bulls protect this as best as they can, and we continue getting pushes towards the all-time highs from our other major sectors, I expect Apple to be kind of carried forward with the bulls. But for the weekly uptrend confirmation, because now it's not a weekly uptrend, guys. Triple equal highs, no move higher. So we cannot say the weekly uptrend is confirmed just yet. For that, we would need a break of 232. And to the flip side, if we revisit the lower zone down here, 219 down to about 214, this is where I might get interested to be playing some short puts on Apple or a little bit of a swing trade long for Apple. 219 down to 214, but I'm going to be going super light on the swing trade, guys. Very, very light because it's not my preferred stock right now. If we pull down hard to 214, may free up some short puts in my preferred zone, 210 down to 208. So that's just how I see it on Apple right now. Very, very mixed price action, and it has been that way for about the last 2 months of trading, right? Moving into AMD. AMD with a big decline today after having their AI day. They finally released the details surrounding their competing product with the NVIDIA suite of commercial grade GPUs for data center applications, right? So AMD came out with that release today, and they will be starting to ship those products in the next quarter. And they already have big partnerships, guys, with Microsoft and Meta and OpenAI as well. So I was fairly pleased with the event that rolled out today. Right here, you can see the headline: AMD plans to mass produce the MI325X AI chip in Q4 2024 to rival NVIDIA. This is not new news. We've been anticipating this on a channel for a while, right? I've shown you guys the estimates for the EPS expansion, Q3 in 2024, Q3 and Q4, as they roll out that competing product to NVIDIA. And also the revenue bump is coming shortly. And here's what it's going to have as an impact over the next 3 years, guys. They are starting their ramp similar to the way NVIDIA did it as well. There's your EPS expansion, and there's your revenue expansion as well. So today, they had a lot of speakers coming out and presenting the product, presenting the use cases for the product, but the market did not appreciate it whatsoever. I was listening to it. I liked every single minute of it. There was literally nothing bearish at all, but it's just so funny, guys. Sometimes, like I was saying, right? Sometimes you just get these events and they come out to be a sell the news event. But in any case, we were anticipating some of this possible price action, right? If we were topping out, we would have possibly a move lower to set the daily higher lows for possible further daily trend continuation. So AMD down about 4% on the day, coming into our contested area, right? We know this area very well, guys. 162 down to 154. It's been a highly contested area so many different times over the course of 2024 so far, and I expect this time to be no different. Even though the box is red right now, I'm going to change it real quick to green because it is a support, so just not to confuse anybody, right? We're going to put this to a beautiful green color, and there it is, right? So this whole area going to be acting as support for the bulls. Nice daily uptrend. Daily higher lows are right here, 158.35. And keep an eye, guys. A lot of things were hitting oversold. Hourly oversold conditions were hit today through the extent of the drop. 30-minute oversold as well. 15-minute was deep oversold for a very long time. So we will be looking for the recapture of the hourly uptrend. If they can get it done tomorrow, you guys know the daily bounce or the daily drawdown is finished, and we might be looking for another leg higher. In the event we fail, though, guys, in the event we get lower high into lower low, well, keep an eye on this, how we react to the support zone down there. And just keep in mind, just looking for something we've also been expecting, right? AMD's had a very nice 4 weeks worth of rally. The weekly uptrend is in full bull control. We just be looking for a weekly higher low for possible further trend continuation, which is why I say the bottom end of the support range down here, guys, 154, 153-ish, could be the last line of defense for the bulls, establish the weekly higher lows, and then make a little bit of a push into the earnings report, which is going to be in roughly 3 weeks' time, Thursday the 29th. So not looking too bad for AMD. As a matter of fact, I opened a brand new position on the company with today's declines today. We'll go over that at the end of the video. Moving into Amazon, give me a very brief second. Perfect. So moving on to Amazon real quick. Amazon up about 0.8%. Not the worst day for Amazon, and very, very nice push to the upside, right? So Amazon now coming in with the engulfing move. Daily downtrend was had by the bears, and now we have an over 100% engulfing move. Creates a lot of space off these lows, 180s, to be able to reset into a new daily uptrend for the stock. coming into our area of resistance though, 190 down to about 187 and getting rejected there in the early portion of the morning. Big prior resistance zone for Amazon, guys. So not surprising in the slightest. Very logical area of rejection. What are the bulls trying to do right now? Setting up the daily uptrend. More specifically though, they're trying to establish the weekly higher lows. Beautiful weekly uptrend right now on Amazon, guys. Beautiful move lower, trying to set the weekly higher lows, anything above 168.60, looking for the weekly higher lows into support for the perpetual weekly uptrend, or rather, the potential weekly uptrend continuation for the bulls, which is why I say I love this stock, guys. If we somehow revisit the lower 180s prior to earnings, I will be a big fan of buying more and more of this company. I think Amazon is going to have a tremendous year. And as a matter of fact, they just said that their their most recent Prime Day event that they've been having from Tuesday through today has been their best Prime event ever. I mean, every single year is their best year ever, but this year is no different. Once again, record-setting year for Amazon in that respect. Fundamentals of the company are very good, and the valuation too, guys. The valuation of the company is really not that bad. Amazon, well, I mean, it's roughly 10% higher right now, so the PEG ratio should be closer to about a 1.55. Not all that bad at all. Love this company where it currently is right now, but if we get any further dips, I will be loading up a little bit more. Now, taking a look at Google. Google also not looking too bad, 0.07% to the downside. But we know that recently, guys, Google has kind of lost its daily uptrend momentum, right? So it had the daily uptrend, was going for it, and now we kind of lost the daily uptrend. Still not a daily downtrend, however, right? That would be lower high into lower low. So we'll see what happens with Google. But one pattern, guys, keep your eyes on. The inverse head and shoulders could be a thing, and you see it also possibly on the weekly, right? See it best on the weekly, as a matter of fact. That could be a thing leading in to the next few weeks of trading, so we'll keep our eyes peeled. But one thing's for sure on Google, guys. What are we looking for here? 200-day moving average is the next area of short-term support. And then obviously it's all the way down here at about the 152, right? So in the event Google continues to flush, what are the bulls looking for here? We're looking to change up the weekly uptrend. So weekly up, weekly downtrend was in motion. The bulls had a 100% engulfing move. Now we're looking for the higher lows for possible weekly uptrend shift back to the bulls. I still do think, guys, that Google is one of the best opportunities in all of the tech market right now. Their PEG ratio is extremely cheap at about a 1.14, 1.2 since the price is slightly higher than 158. Extremely good valuation, guys. We've been covering this one for a while. Very strong net margins for this company. Great cloud expansion, great YouTube and advertising business expansion. Look at this EPS expansion. All the analyst price targets are all above the current share price by a wide margin, and beautiful revenue expansion as well. So this one is one of my favorite plays right now, and I continue to play it with very aggressive short puts, guys, around the 160 to roughly 157 range. Love it, and we even have some leap calls on this one as well. Suffice to say, if for ever which reason, guys, we retest down here, let's say through earnings or XYZ reason, guys, I will be a heavy buyer of Google shares in that lower location. Moving on to Meta. Meta down about 1.13%, but they can definitely afford it, guys. They've been on a majestic run so far, cracking the 600 psychological, and then we kind of got rejected from there. So Meta, still in the context of this beautiful daily uptrend, looking for its higher low. Anything above 554, looking for a daily higher low for possible further trend continuation. But in the event the bulls give up everything and set up the daily downtrend, just understand who's in control here. Beautiful weekly control by your bulls. Any move lower, guys, just gonna be looking for a weekly higher low, anything above 493 for that weekly higher low for further trend continuation. Mark my words, I've been saying it a few times on the channel. If we revisit the 540 location, which is exactly the 12 EMA as well, if we revisit that, call it about 550, 540, it's gonna be one of my favorite trades. The good old breakout, retest, and possibly run. This is an area where I'm sitting very patiently and waiting for an entry on Meta to have a beautiful swing trade location for possibly some call options or some shares as well. So Meta, no real red flags at all. If I do say so myself, the bulls still remained in full short-term control on the daily, on the weekly, and also on the monthly timeframes too. Moving on to Microsoft. Microsoft still a little bit weak today, 0.39% to the downside here. So we know the context that Microsoft's been in, right? In a daily downtrend. What are the bulls looking to do? Looking to reverse this into a daily uptrend. So take a look at the hourly time frame. We had the hourly uptrend, and now today the bulls are trying their best to save it, right? No new lows right here, and also no establishment of the hourly downtrend by flushing those. So it is still a battle. This is still a one single leg of daily move higher. And what we need to see from the bulls, guys, is a lot more bounce than this, right? Need to see at least come up to the 618, which is 425. And the best is all the way up to about 430, which would be a 78% retracement. If you give me a bounce of that size, it stands to argue the bulls have created a lot of space off the lows to be able to reset into a new daily uptrend and start attacking the above resistance zone a little bit more. Above resistance has been a problem for Microsoft for a long time this year, right? You can see all the times that it's been getting rejected in that zone, which is why I say very, very big zone. So I like to see the bulls pull up into it, reset into a new daily uptrend. That will be the best case scenario. What we're looking for too is just continuation of this weekly uptrend, right? Microsoft bulls still in control right now. What you would not want to see is a cut of 401 because that would just undo all of that weekly momentum, guys. And we have to start everything from scratch, kind of like I was explaining on Bitcoin. But I do remain firm on this, guys. If we get a revisit of 405 down to about 390, this lower location, I'm going to be shopping for some leaps on Microsoft and probably adding a decent amount of shares to the long-term portfolio. I think there's great value in this lower location, and Microsoft is in a uncharacteristic fashion right now, trailing behind the S&P 500 on a year-to-date gain basis. So in the event we do fall a bit more, this, this diversion from the S&P will be getting a bit more accentuated, and that's where I really like striking in that lower location. Moving on to Netflix right now. Netflix with a very good showing today as well, 0.39% to the upside. New all-time high for Netflix, and the bulls remain in full control. Beautiful daily uptrend formation right now, and the most recent higher lows are all these guys down here. Let's call it roughly 697. So any pullback at this current time, looking for the daily higher low for further trend continuation. The bulls in full control of these short-term timeframes, even on the weekly, looking very good, guys. Weekly trend expansion. You see these wicks kind of tested our support area, starting at 700, going down to 675, and they just touched it and then just continued rallying away. So Netflix looking very good, but keep in mind, guys, their earnings are next Thursday. So I'm not really expecting this one to really move away extremely fast, but if they can create more space, guys, between us and this support zone down here, usually Netflix moves about 7-8% on earnings. So if they can make it all the way up into the 740s, let's call it about 745. If they can make it up to here before earnings, it gives us a good cushion, right? 7% if they really get destroyed on earnings for XYZ reason. We know it happens sometimes, guys. 7-8% would be bringing us back into the zone of support, which would be a breakout, retest, and possibly continuation into November and December. So I'd be a buyer if for some reason after earnings we dip back down into those levels. Moving into NVIDIA right now, NVIDIA can't keep this one down, right? It's like trying to stop a freight train, essentially. 1.63% to the upside, looking very good, guys. Almost approaching our all-time highs, right? 135, tiny little area of resistance, and then it's 140. Beautiful move by NVIDIA right now. Gorgeous daily uptrend, nothing bad to say. We have now cleared above our, most relevant area of resistance, which was the whole 126 to about 130 zone. Cleared above it right now. So it stands to argue, guys, that on a reversal pattern right here, if we start losing a little bit of gains, well, they have a lot of space, guys. Anything above 115, looking for the daily higher low for possible further trend continuation. So target this area as a little bit of a back test, 130 down to about 126 for a potential push higher. On the weekly as well, if we close the weekly like this tomorrow, going to be looking good. Weekly uptrend re-established by the bulls. Tons of space, and look at this MACD, guys. Oof. Look at that MACD. Looking pretty good for some bullish continuation. The overhead, the large area of resistance, guys, even though it's this, I would say and stand to argue that it does remain the 150 psychological. So NVIDIA bulls, congratulations, guys. It is looking quite pretty. No red flags to speak of right now. Moving on to Tesla. So Tesla, unfortunately, they're doing the robo-taxi event a little bit later tonight in about an hour and a half still. 10 p.m. Eastern, 7 p.m. Pacific. So I don't yet have the details, but we'll probably go over them in tomorrow's video. As of right now, you can see down about 1%, but it's going to be impossible for me to give you guys price action targets, right? You know the expectation for Tesla. It's about 6% up or down by tomorrow, depending on what happens for the event tonight. I do have a slight bullish lean for the event, and if we do get that 6% move to the upside or better, we're going to start challenging, guys, our, if we get 6%, it'll be up to about 250. But if we get any higher, we know what we have to challenge, right? The bulls have to challenge the ever so elusive 265, which has been holding us back, guys, since September of 2023. And obviously, if the event is not well received to the downside, Daily downtrend simply continues, coming into this big area of support that you see best on the weekly, right? 220-ish down to about 200, this zone down here. Large area of support for the bulls. So they would still be in weekly control. Anything above 203, looking for a weekly higher low for further trend continuation. And if we get that push into the 265, just simple weekly trend continuation, right? So I can't give you guys much more information than that. The event is in an hour and a half, and we know it's going to be a big time mover. So we will see how the price reacts to those levels tomorrow. If it's violent to the downside, I could be interested in some short puts at the lower levels. But if it's a brutal move to the upside as well, very tough for us to chase into the 265 resistance. Moving on to Palantir lastly. So Palantir up 0.9%. This one is just an absolute rocket ship, coming close to the all-time highs, guys. All-time highs are a short piece away right now. The all-time high is exactly $45, but there's not much resistance up here, as I showed you guys, right? If we go back in time, there was no daily candle closes up there. These were intraday moves. As you can see, just a bunch of wicks. So for all intents and purposes, we are in blue sky territory breakout right now. No real resistance to speak of. The bulls are just running away with it at this point. Very tough to position long at this point, guys. If you've missed it, you've missed it. Wait for the pullback. Not financial advice. That's just how I'm trading it, right? Daily RSI, 78, very overbought right now. Weekly RSI, 79, equally as overbought too. And you can see who's in control here. The bulls control everything at this current time, right? Any pullback is going to be looking for a daily higher low, anything above 39, looking for the higher low for possible continuation of the moonshot rally. Bulls in full control of this gorgeous daily uptrend, full control of the weekly uptrend as well, guys, right? Weekly looking beautiful. So congratulations out there to all the Palantir bulls, right? Looking very strong, but not the best risk reward to the upside, in my humble opinion. You guys are free to do whatever you want. If you want to YOLO call options up here and take your chances with it, well, you know, you are free to do whatever you want. It's not the way I trade. I'm more keen on waiting for the weekly higher lows because we know they happen, right? Palantir goes on crazy moves, has some weekly pullback before putting in more, right? Weekly pullbacks, you've seen them after big rallies. They have the weekly pullbacks, big rallies, pullbacks, big rally, pullbacks. So I'm just waiting for those pullbacks, guys, back into the big 39 to 38 zone of support so I can possibly find another zone of entry for a little bit of swing trades longs or some short puts. So that's pretty much everything we had, guys, in terms of our portfolio rundown. Hopefully you appreciated that, or rather, technical analysis rundown. Now let's do a brief recap of where we stand for the week, guys. It's been a very good week for myself and all of our Discord members, guys. Tons and tons of wins so far. So before we go over the remaining positions in the portfolio, let's go over a few of the ones that we have closed since maybe you saw the video on the Monday session, right? So let's bring up some of these. You might remember that we had the Square trade that was on. We also had the ON Semiconductor trade that was on for the early wheel trades throughout the week. Now, happy to say that both of these were closed. We closed the Square one pretty much the very following day for pretty much 63% profit. Easy wheel trade. And the ON Semiconductor one, we literally just closed that one today as well for 9 cents. 80% gain on those wheel trades, looking very solid as a whole, guys. Those are just two of the wheel trades that we did kind of enter and exit very quickly this week for the top 5. They were in the top 5 options plays. We also had another cheeky one that I chose to do earlier on in the week, which was SMCI. I don't think I showed you guys. That was on the 8th. That was on the Tuesday, so you wouldn't have seen this one in the portfolio. So we went with a little bit of longer duration on SMCI. We went with a November 15th $36 strike. You might remember the move on SMCI, guys, earlier on in the week. We had a very violent push down on the Tuesday session, 7% down. And I'm happy to say, guys, that myself, we were able to clip the lows here. And the reasoning behind this is we went with 1 month worth of time at the $36 strike, and they were paying very good premium, guys, over $2 in premium. And you can see in the write-up that I had here, that's about 5.7% for 6 weeks, 1% per week, with a 20% margin of safety before assignment. Very good break even. We got $2.06 for those, and happy to say, guys, that we were able to close that the very following day for a juicy credit, guys, 35% gain. You can see here we pocketed, roughly over, 70 cents in gains right there. Extremely good. 2%, guys, in one single day. So we smashed that one. That's one of my more advanced strategies for running the put wheel, where we write contracts that are further out, and any dip, any bounce is going to pull a lot of premium out of that contract. It's a good way to pull the ROI forward, right? We also had other closing trades for the week, guys, in terms of some that we closed. So the Amazon trade, you might remember this one from the Monday session. Those were the call debit spreads that we opened for about $1.93 each. Those were closed today, as a matter of fact. We closed a lot of good positions today. Let me just show you them real quick. So what did we close today? Amazon, 18% ROI in 2 days. There's the closing order for those. We also closed some of the CrowdStrike orders. You remember we had the CrowdStrike trade that we opened a while ago, those call debit spreads, 300 versus the 310s for about $4 each. Well, happy to say, guys, that we were able to close them today for $5.10, 27.5% ROI in one single week. Very, very, very solid. We also closed another trade, guys, the waste management trade that was closed yesterday, closed half of the position. We still have half, $3.95 to $5, 26.5% ROI in 2 weeks, locked in those gains. But you'll see right here, we still have one of the two contracts. It's sitting at the bottom end of the screen right there. Still have one. Looking to close the second one, guys, if we get a break or close into the 215 level, which is the overarching area of resistance above us. And I'm pretty sure that's pretty much it for the recaps, unless I'm missing one. I know we closed a lot of gains today. Oh yeah, we also had a Netflix. Remember, we also had those Netflix contracts, which are still in the portfolio. As a matter of fact, take a look right here. Those Netflix ones are right there. So you got to speed it up a little bit because they're trying to log me out. So you can see the Netflix bull debit spreads. We started off with 4 of these contracts. We've closed every single one at a profit. We only have one little contract remaining, and that will be closed if ever Netflix breaks above 735. I want to close all of these prior to earnings. Even though I'm bullish leading into earnings, we've secured so many gains. 3 out of 4 of them closed. The last batch was closed at 19% ROI today. Looking very, very, very strong for those contracts as a whole, guys. So as you can see, a lot of wins for the week so far. No major losses realized so far. Not many losing positions to begin with in the portfolio. So it's been a great week for myself and our Discord members. So moving on to the ones that we still have right now. So we opened an AMD contract today when the stock was plummeting. I did not get the low of the day on this one at all, but happy with the ROI that I got. We went with the next Friday 152.5 puts for 73 cents, roughly our 0.5% rule. And I'll explain, guys, why I like this trade location. 152.5 is down here, literally at the 200-day EMA and below the big area of resistance. And look what we're going for. Going for those weekly higher lows. So if I get a sign down here at 152.5, do not mind, guys. I'm looking to ride this one higher. So that's just the fact of the matter for AMD. We still have the alimentation position right here. We've been averaging into it. Should be ready for some covered calls quite soon. We've went over that a couple times, right? Have a BITX trade ongoing and more BITX trades as well. This is a December $24 put. You can see we got $4.30 for them. Very, very easy trade for us to make, guys. We have a huge margin of error on this one. Our break even is 1970. That would be Bitcoin roughly 50,000. And at 50,000, I am definitely a buyer. But the logic behind this one, guys, is the amount of premium that we're getting, right? Just to do a quick calculation, that one is roughly 10 weeks worth of time, December 20th, right? So 430 divided by 24, you can see this is the total ROI. When we divide that by roughly 10 weeks worth of time, getting about 1.8% per week. No brainer trade in my opinion. A little bit more on the risky side because it's 2x leverage, but still all the same. This one is one expiring tomorrow, the 25 puts. So BITX right now, $24.98. If I get a sign, guys, I'm not going to be upset. The covered calls are massive on this one. So if you guys want to see me wheel out of this one with some massive covered call premium, just stay tuned. I'll show it on the channel. Here's our CrowdStrike remaining position. We're keeping the shares through about 330. Beautiful swing trade on CrowdStrike so far, though. Still have the Disney, still have all the Google positions as well. Matter of fact, I showed you guys this one, right? The November 2022 160 put. Going with those longer dated contracts when I like this one, getting a little bit more aggressive with Google. Decent ROI, guys, right? This one is about 7 or 6 weeks of time worth of time away. So 610, this is how I do the calculation, right? 610 divided by 160 is our strike. That's about 3.8% for the next 6 weeks divided by 6. Over 0.5% per week, which respects our minimums. And any pop on Google is going to pull a lot of the premium out of this contract fast. That's what we're looking for. If I ever get a sign, guys, no problem at all. I have a 154 break even. Love shares of Google down there. Other than that, we're still in everything into it. As you can see, Microsoft bull call debit spreads, haven't touched those. Microsoft leaps, haven't touched those. Netflix, one contract remaining. This was a Nike earnings place. worthless right now. New holdings. Well, we're very, very close, guys. This is a wheel play that we got assigned. Very close. If we get called away at 13.50 tomorrow, I would not be opposed. If we're ending under it, I might just roll these calls forward. Our break even right now is slightly below at about 13.27. So we are currently up on the position right now. Same thing down here, guys, for the OXY. We've had those 100 shares of OXY for a while. Our break even on those right now is about 54.16. I always keep track of all these in the Discord here, all the assignment trackers, right? So our break even on Oxy with all the premium collected and the dividend as well is about $54.16. So we're up on that trade right now. We'll see tomorrow. We have some covered calls for 55. We'll see if they expire either worthless or whether or not we're able to roll those ones forward as well for a gain, or whether we get called away. The square leaps are doing fantastic right now. And then there's all the hedges to the downside, right? So you might see a lot of red here, but this is normal. It's the TLT trades. They are hedge trades for market downside. As you guys know, I always run about $100,000 of exposure. So all of these hedges combined are roughly about 10 grand. They're not that much, guys. They're about 10% of the overall portfolio. And most of that is just TLT shares. So, you know, even though a lot of these are options that can expire and I can lose money, the shares, I'm going to keep them, guys, and I've had a good average cost on them so far. The average cost of the shares right now are about $97.15. So we're down about $300 on the shares, but I'm not too worried. And here down below, we have the Twilio Leap call as well. And we also still have the last waste management contract. So that's pretty much everything for the portfolio, guys. Hopefully you enjoyed today's market recap. Sorry for the bit longer video. If you enjoyed today's recap, always consider dropping a like. I'd appreciate it for the growth of the algorithm. And second, if you appreciated this type of content, consider subscribing to the channel. We do these videos every Monday through Friday after the close. And lastly, guys, if you have any questions, always feel free to leave me a comment down below. Anything you want, if you want me to look at a specific stock, technical analysis, an options trade, macroeconomic discussion, anything you guys want, leave it down below in the comments, and I'll be more than happy to answer you within the first 24 hours. And if you guys want all of these trades in real time, plus our private member live streams, our private videos, so much more, and talk to me every day and ask me your questions, well, you guys know where the link is. It's down below in the description to join our private member Discord. Hopefully see you in there soon. And if not, guys, well, it's always a pleasure. Take care. I will see you tomorrow after the close. Big day tomorrow, banking earnings. Take care. Happy trading and peace.